Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and quite an active day in the mining world. As you can see, our top story here, Argonaut Gold announces Mexican federal government issues decree to temporarily suspend all non-essential businesses, including mining. I don't know that we really need to dig into this story all that much. That headline pretty much says it all. It looks like basically they said federal government has mandated all non-essential businesses, which they decided included mining, had to temporarily suspend operations until April 30th due to COVID-19. Now, that does not seem to indicate that necessarily things will reopen April 30th, but until at least April 30th, all operations in Mexico, which is where most of the silver comes from. So again, a big chunk of the silver supply. Fortunately, my good friend Jeff Clark of goldsilver.com had an article today as well about the silver shock, a new and major threat to the supply. If we scroll down here, there he mentions how 70% of newly mined silver comes as a byproduct. So, as a lot of those mines are shutting down, that means a lot of the silver supply is shutting down. As he gets into the great silver supply squeeze of 2020, and here he says roughly 32% of all the silver that gets mined around the world, much of it as a byproduct, is currently out of production. But it's worse than this, he says, because companies operating in China and Indonesia have not reported publicly on their mining operations. But they're able to guesstimate, and he comes up with a figure of 51% of silver production is currently offline. So, when you think about what's happened here, not only do you have the surge in demand, but you have disruptions into the supply. So, really, I don't know if perfect storm is the right way to describe it, but something like that. And let's continue down here. This was an interesting one. First, here you go. With silver prices trading between $13 and $14, many primary silver mines are suddenly unprofitable. And he mentions, as I believe I commented on the other day, that First Majestic Silver CEO Keith Neumeyer, Jeff is a stockholder, as he mentions there. I do have options on First Majestic, but he had mentioned, Keith Neumeyer, that they will refuse to sell some of their metal at the current price because it would be selling at a loss. Jeff mentions Endeavor Silver, who he has visited twice, has a history of holding back a portion of sales. So even for the silver that is coming out, and certainly First Majestic, one is the biggest silver producer at this point. So that's another chunk. Although here's a factor that I'm glad he mentioned, because I was thinking about it the other day. I haven't heard anyone comment on it yet. So I don't know if I'm the first, but in either case, if you have retail demand soaring like it is, so far I've yet to hear of anything in the industrial market. But if retail demand is soaring like it is, wouldn't it seem at least conceivable that some of the industrial users might get a little concerned and start to take action, as Jeff speculates on here? As he says, it wouldn't surprise me at all to hear if Sony kept buying silver to hoard at cheaper prices, ditto jewelry manufacturers. Now, given the current economic environment, is there going to be lower jewelry demand, lower industrial demand? I would believe that would be the case. But again, to me, seeing really well, you see the kick up in the retail investment demand that has already happened this year. So, but this will be certainly interesting. Already is interesting. Few other stories regarding the metals. Why did Russia just halt domestic gold purchases? Was a story a day or two ago. Here is Zero Hedge commenting on it. Since April 1st, 2020, the Bank of Russia has suspended the purchase of gold in the domestic precious metals market. And they speculate a couple of reasons why Russia might be doing that. And I would say none of which actually seems too plausible. And maybe I'll take a stab at it, see what my guess is. But let's go through the four of them first. Russia reached a limit on the relative size of gold reserves to overall reserves. While it's certainly possible, given every action they've taken, Putin's public commentary on the dollar in recent years, gee, I would think you'd change the rules rather than have gold instead of dollars, but who knows? Number two is ease tightness in global gold markets. Again, would Russia really be wanting to hold up the COMEX arrangement? Perhaps to the degree that they were buying metal cheap. I understand you maybe don't want to blow it up then, but this is saying they've stopped buying metal. So, number three, offer domestic producers profit opportunities. I suppose that's possible. Four, they no longer like gold. That would seem incredibly difficult to imagine. I'll introduce five, is Russia telling us exactly what they're doing. Who knows? But I just want to present both sides of the case here. I know I'm a uber silver bull, but trying to just, my real goal is to be as unbiased and follow what I learned on the trading floor, where there's great to know what you want or hope for or think is fair, and then there's what happens. So always like to present the story as fairly as possible is my intention. And here you see world's top gold market freezes as Chinese shoppers stay away. So, wow, he looks like he's not going to be buying any gold there today. And you can see the pandemic has basically shut down some of the malls. This article talks about supply chain disruption here. China retail sales of gold, silver, jewelry plunged 41%. So not surprising. So there are, again, some counterbalancing factors. But to me, I still think the dominant theme is that people have bought out what's available here in the West. And we've seen estimates in terms of how much supply has gone offline. I heard Keith Neumeyer of First Majestic Silver mentioned 25% the other day. Then heard from someone else that had gone up to 30%. That was before the Mexican news. And again, you saw Jeff mention that he could estimate as high as 51%. Of course, this is not limited just to silver producers. And an interesting article, the world's largest platinum producers, Anglo-American Platinum, Sibanye-Stillwater, and Impala, have declared force majeure on contracts after a 3-week national lockdown, forced operations to close. Interesting for a few reasons. A, just hearing the term force majeure pop up. It's actually the second time today, because was listening to an interview with Rick Rule. I believe it was on Reluctant Preppers, but he was even talking about, in a different context, force majeure on the COMEX, whereas this is the miners issuing a force majeure, yet still. And also, I know Rick doesn't often talk or dig into that side of it as much, so certainly an interview worth checking out. He had some comments that indicated he thought somebody would be taking more delivery than is possible. And I bring this one up again just to point out that you have not just the things that I've talked about on the channel for a while about the fundamental reasons that were already in place, but now with demand surging and the coronavirus actually disrupting some of these things, you see what's happening, as it has been quite fragile. Few last ones here. The dark secrets of the Fed's last Wall Street bailout are getting a devious makeover. Certainly, there are people more qualified than myself to talk about the details of the Fed and these stimulus packages, although I will just say anecdotally, it seems to me like between the Fed action and the stimulus bill, some form of broad day bank robbery. And I'm not trying to be callous in saying that, yet here, just 14 global financial institutions received 83.9% of these loans, or 16.41 trillion. Six of the institutions receiving massive loans from the Fed were not even U.S. banks, but global banks. Another 10 trillion was spent by the Fed providing dollar swaps to foreign central banks. Are there any other highlights? As you see, it goes on and on. The Fed plans to use a special purpose vehicle, New York Fed, for many of its funding facilities again this time around. It should provide no comfort to the American people that Enron used SPVs to hide the true state of its finances and blow itself up. So, yeah, this does sound incredibly similar. Um, and I would say to folks at home, here we see Fed launches repo facility to provide dollars to foreign central banks. While you'll see a lot of terms and acronyms thrown around, in a lot of cases, if you really want to simplify things, it doesn't have to be that complicated. It's either money that was lost. One way or another, the Fed is printing money to cover bad loans and bad debt, which I think on one hand is very unfortunate. Although it's so stunning what's happened is the I mean, I've become so accustomed to watching these financial markets where you could land an airplane on the White House lawn and nobody notices. Yet, I mean, we've gotten to the point last week, the Fed, I believe, printed $625 billion in a week, which by any sort of rational measures, you would seemingly think would affect the dollar and the US Treasury market, as well as gold and silver, where you see gold at 1593. So a little bit choppy the last couple days, but slightly under $1,600. Silver under 14 bucks again. Let's call it 1390. And there we see got close to 14 bucks. I wonder if that spike down um, would be considered a spoof, as the Department of Justice is investigating. By the way, if anyone from the Department of Justice or the CFTC watches the show, I'd love to invite you on. There's some degree you probably can't comment on a lot of this stuff, but I do think there are a lot of folks wondering. In fact, folks at home, hit the share button if you're also wondering if that was a spoof and if there will be any comment or at least some guidance from these agencies where, again, we've had many traders arrested, charged with the RICO Act in the gold and silver markets. So we will see how that one goes. Again, I say this even more so in the context of massive silver demand. And you would think, gee, if Mexico decided that no mining could occur for at least the next month, that would have seemingly been a bullish factor for silver as a commodity, although that was not the case, as you can see. So lastly, you can see a look at the silver miners here, mostly flat, down slightly on the day. Fortuna down 14 cents. So maybe 6%. Looks more intimidating than it is, but most of the silver miners down today. And on a final note, if you are not yet aware, I have a book that is now available in the audio version called The Big Silver Short, which digs more deeply into a lot of these silver issues that I've talked about here in the video today. So the link to pick up a copy of that is below. I think it's quite timely, if I may say so myself. Perhaps I'm a little biased yet. I mean, it seems like everything that the book got into is playing out in the markets now. So in the description box below, you can find out how to get a copy. With that said, thank you as always for watching. I hope you're having a good day out there. And if you'd like some more coverage of these financial markets, then here you go.